Hello traders, my name is Logan with Funding Talent. Today, April 12th, we are doing our market forecast for the upcoming week. And if you tuned in before, you know that these videos are made for you to know what fundamental drivers are going to be present in the upcoming week and the best technical setups for you to keep your eye on and hopefully execute on in this upcoming week. So without any further delay, let's get right into the video. So traders, as always, before we get into the charts, we're going to start off with the fundamental drivers of this upcoming week. And in this example, we're going to be looking at the high impact red folder news first. So for this upcoming week, again in EST are listed all of these times. We're starting the week off at Sunday, 7 p.m. with some USD news when the Fed Chair Powell is going to speak. Again on Monday, we are starting off with some Canadian dollar news at 10:30 a.m. As well as Tuesday, we have some USD news at 8:30 a.m. and some NZD news at 10 p.m. Again, on Wednesday, we have some USD and AUD news at 12 p.m. and 9:30 p.m. On Thursday, we have some news at 8:30 for the US dollar again, and then at 10 p.m. for the Chinese yuan. So there's going to be a lot of news in this upcoming week. And again, for our scalpers or intraday traders, around these times, just tighten up your stop losses. Be sure to be extra careful because we know volatility can come into the market at these times. Spreads can widen and the market can move more than you expected. So be careful and don't get stopped out. Producer prices for final demand in the US rose 1% from a month earlier in March 2020. This is following a 0.5% increase in January and easily beating the market expectations of a 0.5% advance. Cost for goods climbed 1.7%, which is the largest increase since the index began in December of 2009. This is boosted by a 5.9% jump in energy prices. So essentially, prices for producers to make things are rising, which means that the cost to purchase those things is also going to go up. Raw goods are costing more, therefore prices of consumeristic goods will rise, lowering disposable incomes overall slightly. So, in other news, the CBOE Volatility Index, also we know it as the VIX, and it is also known as Wall Street's Fear Gauge, closed at its lowest level since February 2020 as stocks began to trade at record highs. Comments from central banks and the rapid rollout of vaccines have helped reassure investors that there is little to be afraid of at the moment. The VIX is the fear index for our economy. The higher the VIX goes, the more volatile assets are. It is basically gauged off market sentiment and people's gauge to what the market is going to do in terms of volatility. So when the volatility index is higher, you can expect volatility to spike. As we saw in March 2020 when the coronavirus happened, the VIX climbed exponentially higher. And then, as I just said, now it is at its lowest points since February 2020. That means that there's not a lot of fear in the market. People are relatively happy with the way things are going. There's a lot of good news going out and people are not scared. Investors are happy, willing to invest their money. So for our market sentiment this week, as you could probably guess, because that fear index is hitting the lowest time we've seen in almost a year, a little bit over a year now, you can imagine that we are heading into a risk-on market sentiment. For our newer members that are watching, risk-on market sentiment means that expectations are higher for further economic growth. This means that we can expect to see appreciation in the Kiwi, the New Zealand dollar, the Canadian dollar, the Australian dollar, the euro, and the pound. This is if the risk-on market sentiment plays out, which it has been the last couple of weeks, so we can expect that to follow through. Besides, for those consumeristic prices increasing, news is still showing great signs for the economies of the world and continued recovery. Moving into our charts for this week, I am very, very, very happy. I cannot stress that enough with the way that last week's market forecast turned out. We had some amazing plays, and I really hope you guys caught a couple of them. To start off on the list, we had AUD CHF. We were about this level when I showed you guys the last market forecast. And since then, we've completed our third wave, spawning a fantastic risk-reward opportunity and a really, really great trade. And honestly, this week has just been full of those. So if you happen to catch this trade, great job. I would recommend covering some profits now if you're still in, because we can expect the fourth wave retracement to soon come into effect. As well as that, on the Swiss franc pairs, we also had Euro-Swiss franc take off after the break. We were at this level previously, retesting this resistance fractal, and since then, I said we were going to come lower, completing our C wave. As you can see, our first take profit was hit just of yesterday. So if you're in this, amazing. If you were in both trades, even better. I'm really happy for you, and I hope that most people did catch these, because I know I did. So the first take profit was hit. We can expect the second take profit to come into effect now if we continue in our bearish trend. Moving into USD CAD, this worked out phenomenally too. We were around this level, maybe here. No, sorry, here. We were around this level at the last market forecast, and I said, okay, we had a good size down. We had a very good downside move from our entry around here. But it does look like a corrective pattern. So I said prices could retrace. What happened? Prices retraced, backed up to that high, gave us another great entry to go short, and has been following in that bearish momentum since then. So my bias is going to remain short on USD CAD. If you happen to get out of this trade at the right time and catch that first move, fantastic. Another fantastic Swiss franc pair that we saw play out. We saw the fifth wave end on this USD Swiss franc last week on our market forecast, and I said we can expect this to come down and finish our ABC wave. I think my take profit was set a little bit higher, right around this level, but it was still a fantastic risk reward trade and a high probability trading setup. Our A wave continued coming a little bit lower, and it can be expected to finish now at this low right here, come up, finish our B wave. As we know, corrections happen in 3 distinct waves. A is our first wave down, then B, and then C. The B is the correction of the first wave, the A wave, and then the C is the follow-through. So we can expect the B wave to now start and end, and then once then we will be going again looking for long positions on USD Swiss franc short. Moving into GBP CAD, we did give this out last week, and if you got enticed to get in, you might have gotten in, but it never actually confirmed this head and shoulders, this inverse head and shoulders that we had. But that inverse head and shoulders, since you did not get in, I hope you guys didn't, because it never confirmed an entry, it actually invalidated that head and shoulders and now is forming a double bottom. As you can see, we have a low here. We're still divergent from this low over here in March 16th. But now we're forming a double bottom on this support fractal. So my bias is going to be long for GBP CAD, expecting a bounce off of this double bottom and continuation of the upside. But there's a chance we break, invalidate that, and there would never be an entry. So maybe you could even take that short because we got a break and confirmation of this support turned resistance fractal. Same thing with GBP USD. I see this as a fantastic opportunity for a double bottom. As you can see, we rejected that resistance fractal, came up lower, and we are divergent on the RSI. So my bias will remain bullish on pound dollar. NZD CHF, we had this drawn out for you guys last week. If you caught the breakout of this trade, fantastic. There were so many great opportunities. I really hope you guys capitalized because I'm really trying to bring value in these videos, and I hope you take advantage of that. But we have come down, hit our take profit at this low of the C wave because this is a support fractal that we are confirming right now. Obviously, we can't break that level yet, and we're just bouncing off of there. I wouldn't be surprised if we got a bounce higher after this, but that take profit was hit as well. NZD JPY did work out okay, not exactly to the full extent I thought it would, but I did actually manage to catch 2 really nice trades off this NZD weakness. So we were looking at it last week around the 5th right here, with the bounce off of this support turned resistance line. Since then, we got a nice move down, but not as much continuation as I thought. So if you happen to catch this trade, very nice, and I will expect to see continued downside from NZD JPY in the next coming days or a week. Looking at DXY, sorry, there's a lot of things. I've been walking you guys through this pair. But as you can see, after our corrective wave formed, our ABC, I told you guys, wait for the first wave to form, then we know where bias and market sentiment is going to take us for our next 5-wave impulse, unless we invalidate that, of course. So our second wave looks to have completed forming after our first impulse higher. My bias is bullish on DXY because I can see us coming in and finishing and starting a third wave now, which is always the most impulsive. So this would take us possibly to that 94.5 level. Moving into XAG USD, this silver play we've been playing for the last couple of weeks. I hope you guys are in this as well. We've been short on this, but since we've been forming a corrective pattern, there's a little bit of indecision in the market. But if we get a breakout of the support line, then I can exactly expect the take profit to be hit on this short position and continued bearish momentum to continue coming. In terms of gold, again, fantastic trade. If you managed to get in on this bottom, as I told you guys before, that was a great opportunity to get in, and then we've since then been moving higher. For the people that have not seen the last market forecasts, we are retesting a 61.8 retracement of the last impulse wave on the daily time frame, and we are bouncing off of a support bound in a downwardly trending channel. So my bias is bullish on gold, as I think we can expect to break out of this channel and continue higher. As of yesterday, essentially, we found a low on Ethereum after a bit of a rocky week. We had some downside, but I saw a ABC correction play out right here. Zigzag correction and a 4th wave finish. So my expectations are Ethereum to move higher, completing its 5th wave, and then possibly coming lower for our ABC correction. But I do see Ethereum climbing in the near future. I am long-term bullish on Ethereum, and if you'd like more crypto videos, be sure to let us know. Moving into BTC USD, we have finished our first wave after an ABC correction right here. So you can see A, B, C wave finishing here. First wave higher, second wave correction, looking for our third wave to take us possibly to the resistance line up here in this wedge, which would be a very good take profit. So for our currency basket strength and weakness of this upcoming week, I can see some indecisiveness in the yen and the Australian dollar, and every pair looks to be bullish except for the Swiss franc and potentially the euro. I added a star on the euro because right now we're at a critical zone, at a high that we've retested time after time again, and there's definitely a possibility of us coming lower off of that high. So as of right now, it does look bullish, but be prepared for a rejection of that high and then a move lower in the euro. So traders, that was our market forecast, again, for April 12th. I hope that you took a lot of value out of this video and know what fundamental drivers to stay away from in this upcoming week, if you're a scalper or an intraday trader, and also the best technical setups for you to keep your eye on, either to execute on alone or incorporating your own system into the setup. So if you are not already following us on all of our social media platforms, be sure to do so because we're releasing new content every single day. And if you're not subscribed to the YouTube channel, be sure to do so because we're releasing videos just like this every single Monday. So on behalf from everyone at Funding Talent, as always, happy trading.